Ed Yardeni joins us now, and let's take a conversation forward with him. Ed, so nice of you to join us. Thank you very much. We've always gone out of the way to accommodate interview requests from ET now, so really thank you for all that.
My pleasure.
Ed, if I say that markets in a sense have assumed that interest rates in 2024 will go lower and inflation will not go back in a hurry, is that a fair assessment?
I think it's a fair assessment. I think there's a couple of reasons why interest rates might come down next year. One would be a recession. That's not my forecast. I don't think the Fed is going to be lowering interest rates because the economy is particularly weak. But I do think that inflation is going to continue to demonstrate that it turned out to be transitory. And I do think that the Fed will get down to its 2% inflation target by the end of next year. We're already down around 2%, excluding shelter, rent, basically. And that's coming down at a slower pace, but it will continue to come down. So I think the main reason why the Fed will be lowering interest rates, see how even I'm stumbling here on which way the Fed's going because things change so quickly. But I do think the Fed's going to be lowering interest rates. That will be making the federal funds rate in real terms, inflation adjusted, even higher. And I don't think they're going to want to do that. But I don't see 4, 5, 6 rate cuts next year. I see 2, maybe 3.
Yeah, that seems a given, Ed, because the dot plot pretty much is indicating that there are going to be 3 rate cuts next year, hopefully, fingers crossed at that. But, there's many a slip between the cup and the lip. What about the commentary from now up until when they do choose to decide on rate easing?
Well, I think they're going to try to maintain a hawkish stance. I think Fed Chair Jerome Powell in his press conference following the meeting tomorrow here in the U.S. will certainly push back on the idea that the Fed is going to be lowering interest rates next year. He's just going to say that they're not even thinking about lowering interest rates. Remember that famous line that he gave us in 2020? He said, we're not even thinking about raising interest rates. And 1 year later, that's exactly what they did. But I think in this situation, the Fed wants to make sure that inflation is down to 2%. And so even if we get there sooner than expected, I think the Fed's going to be hesitant to ease too rapidly, especially if the economy proves itself to be resilient as it has been.
What could pour cold water on this assumption that interest rates will go down, inflation will not come back in a hurry? Could it be China? Could it be US itself?
Well, I'm glad you mentioned China because people have had this notion that the only way we can bring inflation down in the U.S. is to have a recession. But the Chinese and the Europeans are doing us a big favor. They're having a recession. And as a result of China's depression in their property market, they're experiencing some deflation, and they're exporting deflation to the rest of the world. So there's 2 major contributors in the goods markets to low inflation and even a smell of deflation, and that is China is exporting deflation. And meanwhile, it's turning out that oil prices are continuing to decline, partly because China's economy is weak, partly because European economies are in a shallow recession. They'll probably come out of it by the second half of next year. But for now, this was very helpful in bringing inflation down around the world.
Ed, great to have you on the show. Thanks as always for joining in with that commentary. Let's see what the Fed chooses to do. Not importantly do, but what their commentary is like, what they talk, I think this time is going to be more critical. But let me take it across to